Hey, everybody, and welcome back to the TradFi to DeFi podcast. I'm your host, Tyler Sherwin, and I'm joined by my co-host, John Tejan. And today we're really excited to continue a two-part series talking with our friend, David Seroy. David is a Bitcoin researcher and Sovryn contributor, one of the most interesting protocols that I have personally come across in recent weeks and months. And this topic that we're exploring is a continuation of our last discussion. So if you haven't yet checked out that podcast episode, I highly encourage it. We'll put it in the show notes. In that conversation, we met with David, and he was telling us about this idea of Bitcoin collateralized stablecoins, where you can actually use Bitcoin as a form of collateral to mint stablecoins. And during the last conversation, we talked about a little bit about how DeFi and Bitcoin are not necessarily concepts that are opposed to one another, but can in fact work with each other. And so today, we're really excited to have you on the podcast, David. Welcome.
Yeah, awesome. Thanks for having me back. Must have done something right on the first one.
I think so. I think, John, we should let him continue for round two, right? Because the conversation was so good. Our community ate it up. We got a ton of feedback saying we want more of this. That's how I'm feeling, so I'm ready for it. How about you, John?
Yeah, I'm ready to get it rolling because I know sometimes people that do podcasts and it's like, well, one of my favorite guests are back again. Well, I do have to say, David, you were my favorite guest we've had in quite a while because it really sparked some wheels turning in my head, and that's why we want to continue on with this second half of it. So let's go ahead and kick it off. Just kind of recapping a little bit of what we talked about the last time. We kind of talked in a big picture way of the role of collateralized Bitcoins and how it affects the overall monetary system, and hopefully one day we get to that hyper-Bitcoinization world that we're all pushing for. But this time we kind of want to take it down a step and go more to what the individual will experience, not necessarily what the entire monetary system will do, but on an individual basis, how does a person interact and how as far as a financial decision that somebody might make, why is this important? What are some of the risks? So we'll get into all of that. So and as Tyler said in our previous discussion, you mentioned a few, but Sovryn was the one that stuck out to me. It's one that I've done a little bit of research in. I'm on their whitelist to be in their initial round of collateralized Bitcoin loans. So go ahead and give us a little bit of a background of Sovryn and kind of fill in some of those blanks.
Yeah, sure. So just to recap, the last episode was kind of talking about this big picture, philosophical, theoretical kind of the role of credit in a Bitcoin-based economy. And so I had mentioned a couple different protocols, Fuji Money on Liquid sidechain, and then Sovryn on RSK. And so I'll kind of give an overview of what Sovryn is, because that's what I'm most familiar with. Sovryn is a DAO built on RSK, which is a Bitcoin sidechain. And the intent is to bring certain DeFi applications, which have kind of been pioneered on Ethereum mostly, but bring them closer into the Bitcoin ecosystem. So in the short term, that's bringing things like AMMs and borrowing and lending and Bitcoin-backed stablecoins to Bitcoin on this kind of federated, trusted sidechain. In the medium term, we think that Sovryn will kind of be this entire financial ecosystem for Bitcoin. And perhaps in the very distant future, we see it as being the financial ecosystem, which in addition to can also be like trustlessly underpinned by and generating fees for Bitcoin using something like validity rollups. So just to recap that, it's like in the short term, we almost like test out these models and say, hey, is there any legitimacy to some of these DeFi primitives and applications? Are Bitcoiners interested in that? And then we'll kind of grow that ecosystem. And then you can kind of look at some of the advanced cryptography and say, hey, can you do this in a pure trustlessly type manner that all the Bitcoiners want?
I think one thing that you had said on the last call was that this was like your grand vision, that you were actually getting product market fit right now at a time where this traction is really starting to pick up for Sovryn.
Yeah, I mean, it's a classic chicken and egg problem. Like the Blockstream guys had this vision, back in 2015 with like the sidechain paper, but for whatever reason, it never really took off, right? And that could be because nobody wanted to deal on like a trusted sidechain, or it could be because all of the other smart contract protocols were either, scams or grift or useless. But now we're kind of seeing, hey, some of these actually have legitimacy. Can we use this to kind of kickstart that chicken and egg problem where we say, hey, we're willing to accept the trust assumptions to see if this is better than the CeFi solutions?
Awesome. So Sovryn is kind of the top line, protocol, or DAO, as you said, and the Zero protocol is where, I guess, the Bitcoin-backed stablecoin and minting a stablecoin against your Bitcoin collateral. So, can you kind of describe not the relationship, but where it fits in their whole ecosystem?
Sure. So Sovryn is this dApp, and then the Sovryn team have developed a bunch of different ways to use your Bitcoin in a kind of like DeFi manner, right? So that could be in an AMM type thing, kind of like Uniswap, or a borrowing against it like Aave or Compound. But really the kind of singular protocol that we recently launched that we're seeing the most unequivocal like demand for is what we're calling Zero. And essentially it allows you to borrow against your Bitcoin at 0% interest rate, without KYC, with no loan term, and outside the control of a centralized intermediary. And so from the TradFi side, it's most closely akin to something like Unchained Capital, where users post their Bitcoin as collateral and get a fiat loan against that. But in Zero's case, the user receives newly minted stable coins as opposed to direct fiat. And so once a user interacts with the protocol and they bridge their Bitcoin over, they post it up as collateral, they receive those stable coins, they can then interact with the other parts of the protocol and say, hey, I want to swap this for more Bitcoin, or I want to bridge this out to other stablecoins that I know I'm familiar with on Ethereum or Binance, and then I want to bridge that to fiat. So for the time being, there's probably a few steps that you have to go through, but the bottom line is it allows you kind of extract out that value from your Bitcoin without having to sell it and without having to give it up to the banking system and the TradFi system, which is at risk of censorship and seizure and KYC and usurious interest rates. It's something that I think we're pretty excited about.
Yeah, I'm excited as well. I'm ready to get started. And it's really a perfect time as far as the market goes because, and I'll let you explain that about it's an over-collateralized loan that, you have to keep a sufficient amount of collateral and margin there to stay in the game, so to speak. But being at I won't say we're at the bottom of the market, but we're certainly at a lower point than we were a year ago. And things are somewhat stabilizing. So, I'm not saying up only for Bitcoin, but certainly I think the bias is up as opposed to down right now. And in this situation, when you're using it as collateral on a loan, that's probably the optimal time to do that.
Yeah, absolutely. So did you want me to kind of discuss the mechanics of how it works?
Yeah, and the collateralization, over-collateralization, and if you want to mention the fee structure there and how that all works into a person who would, hey, I'm ready to, I got one Bitcoin and I want to use the stable coin to, go over to the Ethereum chain and, stake some ETH or something in a liquid staking opportunity, and just kind of walk through what that would be like, some of the things that they would run into.
Sure. So I'll walk through the kind of mechanics of it first, and then we can kind of discuss like actually literally how people do this, like going through, the dApp and all of that. So functionally the way it operates is you post your Bitcoin up as collateral and you can borrow up to 90% loan to value, right? So if you put in $1,000 of Bitcoin, you could, in theory, borrow up to $900 of stablecoins against that. But that is right at the liquidation limit. So if the price of Bitcoin drops by $1, then you're essentially going to get liquidated. And what that means is that you still keep the stablecoins that you've received, but you would lose your Bitcoin collateral. So you're essentially losing that 10%. So oftentimes what people are actually doing is they're saying, look, I want a loan to value of maybe 50%. Sometimes we refer to it as the collateralization ratio, which is the inverse. So 50% loan to value would be 200% collateralization ratio. Same things, just coming from opposite financial perspectives. typically, I think that we're seeing most people take out their lines of credit, usually around 60% loan to value. And then as the volatility increases in Bitcoin price drop, usually we see people adjust their lines of credit by either paying down some of those dollar balances or increasing the collateral amount on the Bitcoin. But the logic still applies, where if you have initially this 60% loan to value ratio, so maybe you put in $1,000 of Bitcoin, you borrowed $600, and the price of Bitcoin is going up and down, and then it breaches that point where it would now again be that kind of 90% loan to value, then you would be liquidated. So it's the same logic that applies. There's some additional mechanics behind the scenes that allow the peg to stay at $1 and allow liquidations to happen cleanly. But from a user perspective, that's all you really need to know. Okay. On the fee side, I just was catching up with my train of thought. On the fee side, typically it's 0.5% or 50 basis points on the origination fee. So if you got a $1,000 loan, that's what, $50 to originate the loan. There's no interest rate associated with the loan, and there's no redemption fees on it either. If and when you do try to redeem those stable coins for Bitcoin, and this is different from paying down your line of credit, but if you try to say, hey, I have this token, it better be worth $1 of Bitcoin, and you send it to anybody else around the globe and they try to redeem it from the protocol, there's typically about a 50 basis point fee on that as well. Those fees can, during times of like extreme demand, fluctuate, but oftentimes I'd say 99% of the time, and if you just wait, even if just like a couple of hours, the fee will essentially get back down to that 0.5%.
Cool. So, and the way I understand it, if you use your Bitcoin as collateral, that has to be RBC, right? Which is the I guess wrapped Bitcoin for the risk protocol, or walk me through that.
Exactly.
The RBC.
So most people understand that Bitcoin is this very simplistic blockchain. You can't do this generalized smart contract Turing complete computing that Ethereum can do, and that's intentional. That's a feature, not a bug. And so in order to bypass this, they created these sidechains, which are separate blockchains. Which, John, as you alluded to, you could take your Bitcoin and you can bridge it into the other blockchain, and then once you're in that other blockchain, you can have all this additional functionality. So you're trading a little bit of counterparty risk by going over this federated bridge in order to kind of interact with these services. And that's just, for the time being, the way it goes based off, Bitcoin's, we'll call them technical limitations for the time being. So for a user to do that, there's a small learning curve, but for the most part, it's pretty easy. So you would have to download a Web3 wallet. So most people in the DeFi community know this is like MetaMask or something similar. Or with Sovryn, you could just use a direct hardware wallet integration. So if you already have a Ledger or a Trezor, you can use that. You download the rootstock or the RSK app in addition to your Bitcoin one. And then on the website, there would be an option to say, bridge your Bitcoin over what we call this kind of fast BTC bridge. And so you would send your Bitcoin to an address, and then 10, 15, 20 minutes later, you would see an equivalent amount of our BTC that is now in your wallet. And that essentially is indicating that you've sent your Bitcoin out of the pure Bitcoin ecosystem, and it's been bridged or kind of wrapped into this derivative IOU that's usable in this other ecosystem.
And so, David, that's like a pre-step, right? Before you even go anywhere near the Zero protocol, you're going to follow those steps to bridge your Bitcoin into RBTC first.
Yeah, exactly. I mean, if users just wanted to get started, I would, maybe go on there and, like I said, download a wallet if you don't have MetaMask or, Ledger or Trezor, whatever you want to use, and then just toy around and, I don't know, send $50 or whatever somebody's comfortable over, and just get familiarity with the protocol. That would be my recommendation.
Awesome. So it's zero term, zero interest rate, correct? So it's as long as you want to hold this. So you come back 10 years and Bitcoin's $1 million a Bitcoin, and you took out a $10,000 loan against the one Bitcoin you had, and you just cash that in, and you got $100,000 Bitcoin.
Exactly. I think that's a key component that when I've actually tried to explain this to people, a lot of them were confused. They're like, why are you giving us like, Bitcoin IOUs? And it's like, well, no. These are not the IOUs that you're essentially receiving as the loan are not Bitcoin. It's denominated as dollars. So John, as you mentioned, like, if you borrow $10,000 against maybe $15,000 of Bitcoin, and then Bitcoin goes up to $1 million, you're not paying back. The denomination is not, Bitcoin. It's dollars. So the value of this is, one, you can unlock essentially value and spending money and purchasing power from your Bitcoin without selling it. But you can also, play this kind of speculation where, if we all think over a long enough time frame that Bitcoin's going to keep going up, then it is a rational behavior to borrow a weaker denomination and bank on the appreciation of the stronger one. And, that's the typical disclaimer, is not financial advice or whatever, but I think that's, what most of us are here for.
And I want to click on a point there too, which is that you're borrowing a weaker denomination against a stronger one. And you're also not borrowing a stronger denomination at all. And so for that reason, there's a little bit of less risk. Like right now, the market is reeling from this whole DCG, Genesis, taking Bitcoin, lending it somewhere else, and then having to pay it back in cash terms based on a change in fluctuation of the price of Bitcoin. You don't run into these issues at all with Sovryn for a whole host of reasons. But the price speculation element is actually one of the main reasons why you might do this in the first place.
Yeah, that's exactly right. I think we mentioned this on the last podcast, but it's what Pierre Rochard wrote in his hyper Bitcoinization article of, you're effectively speculatively attacking the dollar. Another thing to consider is, the mechanics of this protocol are, in my opinion, pretty friendly, right? Like that you don't get liquidated in most scenarios unless you breach that 90% loan to value ratio. So, in most scenarios, you're essentially, again, that example, if you put in $1,000 of collateral and then you borrow 900 and, you reach that, like the loss there is bad, but not brutal, in my opinion. Like some of these protocols, like you're getting liquidated at like 60% loan to value. Just the collateral that's required is so high, and the liquidation terms are really brutal.
So is there any? So say you're getting close to that liquidation point, and so you can preemptively go ahead and add more collateral at that point. You're not going to get a margin call. You do have to self-manage that though, correct?
Exactly. For now, it's personal sovereignty, personal responsibility. Keep an eye on your line of credit. I could see in the future that they would try to add something like, maybe email notifications if people are comfortable doing that. Maybe you can add some sort of insurance where people are willing to pool Bitcoin in, and it's like, we'll cover your collateral. There's a lot of different spin-off products that you could build, but that's probably in the distant future. Another thing which I haven't mentioned, but's important, is the protocol effectively says we'll allow you as the individual to borrow up to 90% loan to value as long as the pool as a whole of all participants are borrowing at less than, say, 65% loan to value. So if the entire system as a whole, not just your individual line of credit, but the entire system is starting to lose collateral and everyone's getting a little irresponsible, then you could see your line of credit liquidated at, I believe it's like a 65% loan to value. So again, in most of the scenarios that we've seen we've seen the liquidation stays at that kind of 90% loan to value because nobody essentially wants to get liquidated. Everybody stays very over collateralized. But there is a possible scenario where you could be liquidated at a lower amount in kind of rare instances. So that's something to keep in mind.
So if you're a responsible borrower, you'll monitor 2 liquidation thresholds. You'll monitor your own, but you'll also monitor the pools just to make sure that everybody else is staying solvent. And I'm assuming this is like to protect for a run on the bank sort of risk that will happen in an event of extreme volatility.
Exactly. That's the underlying biggest risk with the protocol. And a lot of people ask, like, well, how can you lend it at 0% interest? And I'll tie this back, but lending at 0% interest is very easy because you're essentially just minting a new token out of thin air. doesn't cost you anything to mint. Of course, you can lend it at 0% interest. The difficult part is making sure that that token is always worth $1, that the peg doesn't break, that the system is always over collateralized, that if there is a 100% run on the bank in any point in time, that 100% of all those liabilities can be redeemed. And this is more akin to like what the Austrians call commodity style credit versus circulation, or what's called kind of fractional reserve lending. And so the health of the collateral is really of the utmost importance. So Tyler, as you kind of mentioned, if the overall system as a whole is starting to feel that it's losing collateral and it's kind of getting very volatile, then it could say, hey, starting with the very weakest lines of credit, we're going to start liquidating those until the system gets back to a healthy level. So it's almost like a preliminary precaution to make sure that the stablecoin essentially always maintains its peg.
Awesome. So, we talked about a couple of risks of liquidation or a run on the bank. What are some other, risks that people, because there's somebody sitting over there with all their Bitcoin in a cold wallet, hodling until, the end of eternity, and, they don't want to take the risk. But what are the risks really, as far as other than the price of Bitcoin and getting liquidated? There's some other risks involved.
Yeah. So there's a handful of risks, and people definitely need to make sure they understand these, especially on a protocol that's like so early on. So the first one, most obviously, is just the liquidation risk that we mentioned. Monitor your collateral, as the price goes up and down, be sure you're taking care of it. The second one is smart contract risk. And so this can either be benevolent or malicious. There could just be a benevolent, error in the code. Somebody, found something that says, hey, code is law. Like this was just, in the terms, like the developers or the auditors didn't find it and they exploited it. I think, this protocol is a fork of another one called Liquidity on Ethereum, which has been running for, I think, about a year and a half now. And it has, several $100 million. It's been reasonably battle tested. So there is some Lindy, assuming that the code was properly, forked over. But that's, something to keep in mind, is that we're kind of keeping an eye on Liquidity and seeing how it does over in Ethereum. And we're kind of following that path. The second risk with smart contracts is like a, I should say like a rug pull or something like that. So this is important on Sovryn's side. The contract is technically upgradable on Sovryn for right now. On Liquidity, they went the very decentralized path, and they said, here's our code. We're going to burn the administrative keys or the upgradability keys so nobody can make changes to the protocol. That's a double-edged sword, because now if they want to modify something to make sure the peg is more resilient, they essentially cannot do that. On Sovryn side, the team, I believe, is thinking about and likely will do that, but just for now, it hasn't pulled the trigger on that. And right now, the protocol upgradability is technically controlled by the governance of Sovryn. And so we'll, I'm sure, discuss the Sovryn token later and how the governance works, but the bar is pretty high on that, where you essentially need like a 75% pass of the vote to pass any sort of like malicious code. There's ways to kind of temporarily pause or freeze the contract for 48 hours if somehow somebody attacks the governance, but that is definitely a risk. The other one is the federation risk. So as we mentioned before, when people are bridging their Bitcoin over into the rootstock ecosystem, it passes through this federated kind of trusted bridge, which is like this elaborate multi-sig scheme. You can go read about the POW peg that rootstock has built. It's been active for, I don't know, I think 5-6 years now. Sergio Lerner is like the chief security officer. I believe he's identified like more bugs in the Bitcoin code than any person that we know of, maybe besides like Satoshi. So he's definitely a renowned security expert. But it is still a federation. It is still trusted. There could be issues there. And then the last one I would say is an Oracle risk. The singular point of centralization with the protocol is it has to receive essentially the Bitcoin price in dollars in order to function. And so that Oracle price has to come from somewhere. And there's another protocol on RSK called Money on Chain, which has been functioning for, I believe, 3 or 4 years now. That they, it's effectively a decentralized Oracle, kind of something like Chainlink, where people stake their tokens, they submit prices into the feed. If they try to submit a wrong price feed, they lose their entire stake. And so there's economic incentives there that prevent that. But if somehow that Oracle could be manipulated, somebody in theory could change the price of Bitcoin from the Oracle and say that, hey, Bitcoin's not actually $17,000 dollars right now. Actually, it's $1, and they could trigger all the liquidations. I think that's probably the worst nightmare scenario. And there's constant efforts to kind of refine the Oracle. But that's another thing that people need to consider. In my opinion, that's all the risks that I can think of, and they're genuine ones. But I don't think there's anything there that hasn't been considered, and that's not something that can't be made further resilient.
Right. I think I know there's friction between the actual DeFi world that exists on the other chains and Bitcoiners, and a lot of those things you've mentioned, and it is a fork of Liquidity. We'll use Ethereum. They've been working through these DeFi problems, and we all know when they've had problems, and but they've had to deal with these issues, and they've gotten better and they've gotten stronger, and that is the natural path or curve for development of new technology. There's going to be failures, and then we all learn from them, and it's great that you talk about Oracle risk, you talk about smart contract risk. Somebody coming from the Ethereum world is going, yeah, we deal with that every day, and people learned how to deal with that. Go with a trusted protocol who has always had solid smart contracts. Don't go with the guy that just spun up a protocol and wrote his own smart contracts, but's offering a big return. And we've seen that happen. So trust in Sovryn, and like you said, the security expert, the gentleman there's just some really good stuff behind that. Is that people who have to deal with smart contract risk and Oracle risk and things like that there's somebody who has a really solid security background is looking out for it. So I think that's really actually a good thing, and being upfront about those risks is important too, because in this crazy world, those risks sometimes are kind of whitewashed over a little bit, and people don't understand them. I mean, we had the problem with centralized exchanges blowing up, and hey, it's just like a bank. We can trust these guys, but they didn't understand those risks behind it. So I'm really glad to hear some of the things you're saying. It gives me a little bit more confidence in the protocol as well.
Yeah, I mean, absolutely. These things have to gain Lindy. They have to be battle tested. But it's kind of like, does the end justify the means? And we think so. We think like the vision for Bitcoin-backed credit and Bitcoin-backed stablecoins. It's kind of this like treacherous path to like go into this jungle of all these risks. But is what's potentially on the other side like worth it? And we believe it is. And even in the interim, it still is an unequivocally better product than what exists.
Kind of gets to one of my questions, which is, what is Sovryn's approach to user acquisition? Because in the previous DeFi models we've seen on other chains, user acquisition has always been super, super high juiced yields and governance tokens as token incentives for LPing. Can you provide liquidity to Sovryn? What sort of yields are you guys advertising? Are you guys going for super high yields to try and bring in users? Or are you trying a different approach that's more around the fundamentals of Bitcoin and what Bitcoin-backed credit looks like?
If you go into things like the AMM pools, there are some liquidity mining rewards. So Sovryn does have a token, and if you go in there, depending on the amount of liquidity that you put in, you'll receive rewards. I think they come out on like a 10-month vesting schedule. So say you get 100 SOV tokens, they're dispersed over the 12 months. For Zero, right now there are no incentives that I know of. Maybe in the future there are, but we really think Zero will stand alone by itself. And I think that's kind of why I'm so excited about it. Is like I think I mentioned this on the last podcast too. It's like there's that classic meme where it's like the guy's like, bro, please, bro, like just like use the DeFi protocol. It's
Yeah.
gonna be like so good for Bitcoin, you know? And with something like Zero, it's like if you don't want to use it, like don't use it. Like you don't like you want to sell your Bitcoin, you don't want to like at least explore like a 0% loan. Like you don't want to like do the research and like see you know the smart contract behind it. Like you don't want to see that it's not being fractional reserve, that it's over collateralized, that it's providing stable coins for people like across the world. If you don't want that, then that's fine. But this is like a just genuine better product. And so if user acquisition gets like boosted with some yields, like great, like we'll do that. But I don't think it's necessary, and that's super important.
Right, and you know you touched on this on a little bit previously, but can you describe the governance of Sovryn and how that's handled, and is there an actual governance token, or is this just is this how is that handled?
Yeah, sure. So Sovryn does have a token. It's called the SOV or Sovryn token. I think first and foremost, you know, no one needs to use or buy the token whatsoever to interact with anything on the protocol, including Zero. In fact, they don't even need to know it exists. But if you do want to get involved in the protocol, you can buy the token, and buying the token essentially gets you nothing if you just hold it. But you can stake the token in the protocol, and the more of the token that you stake, and for a longer period of time, the more what we call voting power you get. And so the voting power gives you, you know, more votes in any sort of governance that is passed on the protocol. But it also gives you a larger share of the revenue generated by the protocol. So if you recall, when I was mentioning Zero, you know, we have like that typically 50 basis points origination fee. So something like that fee would be fed into, you know, the stakers, who would receive it according pro rata according to their voting power. Or when people redeem the stable coin, you know, they also get to charge a small fee on that. If somebody uses the AMM swap, kind of like the Uniswap equivalent, you know, there's a small fee charged on that. If people borrow, if people lend, if there's other products that are introduced, you know, that revenue gets dispersed to the stakers. And the way it works is that in order to kind of keep maintaining that position of voting power and revenue, you have to continually stake into the future. So you have to say, hey, I'm willing to stake this for, you know, 1 week, 1 month, 1 year. You can max stake for 3 or I think 4 years. So it's kind of like Bitcoin mining in the sense where you have to continually reinvest money into mining equipment. You know, it's not like a proof of stake system. You are staking, but it's not like proof of stake system in the sense where it's like once you've amassed a certain amount and you stake it in the protocol and you continually just like build up your stack without doing anything. It requires a constant future facing commitment to the protocol. And then I'll also say, you know, people obviously just need to do their own research. You know, I don't know what the kind of people's stances are, especially in the Bitcoin community, with kind of what is a valid governance token or not. You know, I'm not making any like attestations for the token, but I have no problem explaining how it works.
But it's very different than, like, let's say Terra Luna and UST, which had the actual token that was used as part of maintaining the peg. SOV has no part of maintaining the peg on Sovryn. Is that correct?
Exactly, 100%. Yeah. So I mean, the way Terra Luna, you know, essentially worked is you know, whenever you wanted to, you know, mint $1 of the stablecoin, you would burn $1 of the kind of the governance token, and vice versa. And these things just went back and forth. And that model was inherently flawed. I mean, it was even in the white paper kind of describing how this death spiral could happen and this hyperinflation could happen and it could go to zero. So it actually worked exactly as intended. But this is a completely different model. And most people outside of the stablecoin community don't really understand this. They just hear like, oh, stablecoin. You know, maybe they know the difference between like, you know, a fiat-backed stablecoin like Tether or USDC and an algorithmic one. But even within that category of algorithmic, we have something like the Terra Luna, this kind of what's called like seigniorage shares model, which in my opinion and in most people's opinion is very flawed, versus something that's an over-collateralized or crypto-backed stablecoin. Completely different. And even the crypto-backed one is like compatible with, I've mentioned this a couple times, but like the Austrian theory of like commodity style credit. Like it is as close as you can get to like a pure passing the purity test as a stablecoin, in my opinion.
So the headline, Terra and Sovryn, completely unrelated, completely different mechanics, very different method for maintaining the peg. Okay, I want to make sure everyone takes that away. This is not the same bizarre perpetual motion machine that was Terra Luna. And I can remember, David, you actually were in our community once, coming onto our podcast or coming onto our community call during the time in which Anchor Protocol was having some nervousness about it, and the peg had briefly dipped to 97 cents on UST. And you were actually in our community actually telling people, I'm not sure why anyone would ever want to touch this thing. I would much prefer to borrow Bitcoin, stablecoins backed by Bitcoin at 0% using Sovryn. And at that time, you know, our community was open to what you had to say, and it was really cool to see how prescient you were. You were right, and that was months and months ago.
Wow, I totally forgot about that. You're boosting my ego here. You know, I'm
yeah.
not that I had any insider info. You know, I was really just kind of you know, just a Zero fanboy before it was even released. But yeah, that's great.
Yeah, so getting back to the SOV token, the governance token, I do quite a bit of yield farming and over in DeFi, you know, but what I like is when you have voting rights and you also have a share of revenue. So to me, although it's not the same, you don't have ownership in the protocol, it is like an equity position. You have voting rights and you get, you know, a dividend if they have one, you know. And I always like that model. You know, you have a little bit of say of what goes on and how it's run, and, you know, as it generates revenue, you get your percentage. And so I like that. You know, whether it's a lot or a little, it doesn't matter. But those mechanics are really important when you're looking at a governance token.
Yeah, it's interesting. I'm just gonna kind of like just go off on a little bit of a tangent here, but you know, it's almost like Silicon Valley, like tech companies. And I think in the TV series like Silicon Valley, they're like, oh yeah, like we can start making money. And he's like, no, he's like, you never make money. He's like, because once you start like making money, then they can put a value on it, you know. And so like I do see like why, you know, some of these people who aren't concerned with kind of like maybe building the right way are like, no, like if we don't want to give any revenue whatsoever, then somebody actually sees like what the intrinsic value of this thing actually is. You know, but the Sovryn team has decided to do that, and I mean, it's been a double-edged sword. Like you've seen the token price like you know, crazy boom like during the peak of the DeFi market, down to like, you know, the abyss of like the pits of Hades, you know. But yeah, I mean, it still just keeps like earning revenue. It gives you governance voting power, and you know, I think it's an admirable way for you know, the team to try to build.
I think all crypto projects are being punished by the macro environment right now anyway. And so, you know, if somebody is wanting to get exposure to the Sovryn ecosystem, there's obviously, you know, we recommend probably starting with like Bitcoin and then borrow stablecoins against it. But if you want exposure to Sovryn, you would say probably SOV token is the way to go as just a way to participate in governance, collect part of that fee revenue that continues, and potentially speculate on the further adoption of Sovryn into the future. But also, why not just buy Bitcoin as well? Is that kind of the way that you see it, David?
Yeah, totally. Again, I mean, you know, I'm not giving financial advice. Everybody needs to do their own research. But, you know, at a minimum, you know, I think it's totally reasonable for people to toy around, see what the staking, you know, module is like. That way you can at least like, you know, vote with, you know, $2 of SOV and just see, you know, what it's like and see, you know, fractions of a cent of a Bitcoin, you know, roll into your balance. Like all this stuff is exploratory, you know, it's fun. Like, you know, why are you even here if like you're not going to just, you know, try some of this out?
Right. And one of the things with governance tokens, and I have a few of them, is whether you know, you can be interested in what they're voting on or not, but I always find it interesting that, you know, you get to see the proposals that are going forward to be voted on. Some of them have discussions. People can air their reservations about it, you know, and then you vote. So it is somewhat democratic, but I like that because it keeps me focused on my investment, you know, and that's kind of one of the things is like, well, you can just buy a token and hope up only, you know, but the way that generates revenue is how it's structured, the changes in the protocol, maybe some new products they're rolling out. Maybe you know this before most of the people in the market do. So I like that, and I'll certainly explore that.
Yeah, it's again, I'm just going to kind of go off on like a tangent here of my own like stream of thought. I think the idea of like a DAO and like voting is like very cool, and like you could have governance over this protocol. But there are times where people are seeing like, oh man, like is this model actually going to work? Like maybe the best products are shepherded by like a few small people. They have the most knowledge, they have the most insight, and like if you're like essentially controlled by the masses, like you're kind of in trouble. So I'm open to the kind of voting experiment with the DAOs, and I think there are some cool aspects, and so far it's worked out quite well. But for protocols like Zero, I personally would like to see trending towards something where it's like you burn the contract upgradability and you say, hey, like this is it. This is how it functions. Like nobody can change this. I think for now, the very, very high bar that we've set on the governance to like adjust something like Zero is totally sufficient. But it's not foolproof. And we want to get to this world where the things do become, as close to as decentralized as we can get.
You mentioned that moment when Sovryn will burn the keys, maybe. And I imagine that as like making it across a bridge and then throwing a bomb to destroy the bridge behind you, right? So that there's no going back. It's like Cortez when he burned the ships of his soldiers so that they could not return. It's a similar sort of thought process that maybe might come for Sovryn. Maybe not even just specific to Sovryn. How are you thinking about crypto and DeFi and Bitcoin in 2023, just even in the macro environment and just where we're headed? What is that role that you personally are passionate about playing? Because I know you're extremely bullish on Sovryn, and I can see philosophically it's like exactly where you want to be. But, if we're trying to not be, like you said earlier, being controlled by the masses, right? The masses of people, the herd is going one way. What are you thinking about that maybe others aren't thinking about right now? Or who are the people thinking that way that you would want to follow?
Oh, sorry. There were a couple things there. So do you want me to kind of speculate on like, on the Zero and Sovryn roadmap, or on the macro environment, or on like, who I kind of like follow and look to in the community?
Honestly, David, I want to go over all of it. I'm sure we can probably get to all of it. But so let's start with Sovryn, and then let's expand into like the macro in general, right? Because obviously there's something about your thesis. There's something about the way that you think, David, that helped you discover Sovryn. Call it maybe a little bit of luck, being in the right place at the right time. But there was something about the way that you think that recognized this opportunity, and clearly you said, this is different than Terra Luna, and this is different than X, Y, and Z opportunities. There's a reason why I want to go in on Sovryn. And so I'd love to get a sense of like your thesis for approaching that space, but also like, is Sovryn kind of living up to your expectations there, and where do we see Sovryn in the new year? So, we can go through all of it, wherever you want to go. I'm just fascinated to hear how your brain works on this topic.
Yeah. So I might have explained this before, but I kind of came from a like hobbyist, like libertarian point of view, and so I was like a decade plus I was reading Ayn Rand and objectivism and all of that, and so like the idea of free markets and not distorting the price signals and Austrian economics like very, very much resonated with me. But it wasn't until many years later where I actually found Bitcoin and realized that it was kind of the embodiment of this thing that I had obsessed with for years. And when I got into Bitcoin, I really followed a lot of the macro people. So people like Lynn Alden and Luke Grommen and Brent Johnson and Jeff Snyder. And so the former two are really kind of these like, these dollar bears, and the latter two are kind of these like dollar bulls. And they're all, I think, like friends with each other, and they all kind of converge on the same end game, which is like, the dollar debasement, but it's the time frames that very much differ. And when I kind of like took this kind of like libertarian Austrian economics view, and then combined it with kind of what some of the macro people are saying, and like seeing like how dominant the dollar actually is, and like the role that it actually plays. In particular, when like Jeff Snyder talks about like the Eurodollar system and the shadow banking system, and how just like there's so much that happens behind the scenes, these kind of like hidden forces that people don't see that keeps the dollar dominant. And when I kind of like I had to like square that in my mind, I'm like, wait, so like maybe like credit does have to exist in an economy. Maybe it's unavoidable. Maybe like we can't escape it. Like maybe the dollar as a stable unit of account actually plays a role. And maybe there's a way for like Bitcoin and the dollar to have this synergy. So it was that kind of like thought process that brought me to my paper that I presented on last time. And so in addition to those thinkers that I had mentioned, someone like Nick Carter, I think he's done some amazing pieces for Bitcoin, despite like for some reason the Bitcoin community doesn't like him. Nick Bhatia's work was also like amazing and really influential. And then of course, like one of the OGs in the free banking space, George Selgin. So I'd say those people off the top of my head are really who kind of influenced me the most.
It's fun to see where that those ideas form and how they spread out across sort of your own Bitcoin thesis, because it's funny, you're talking about the dollar, but you're obviously a Bitcoin bull, but you're talking a lot about the dollar. And I think that's why Sovryn is not trying to make, there's been these experiments with other stablecoins that are based on a system different than the fiat system. And, we usually are trying to get away from fiat in some ways, but it's impossible to ignore the fact that every single liability you run into in your own personal life is denominated in this unit of account. And even around the world, that unit of account has massive influence, and it cannot be just escaped.
Yeah. I mean, there's a couple things I wrote down there. So like another person who I didn't mention is like George Gammon, and sometimes he gets like a lot of the Bitcoiners like riled up. But he, he's a YouTuber. He's not a macro expert, but he's become very knowledgeable in macro because he interviews a lot of these people and he does these whiteboards on kind of explaining some of these hidden forces, these $0 and shadow banking systems going on behind the scenes. And I think that he's like opening up to being a Bitcoin fan, but he understands some of this other stuff. And I'm just like so much of the people that he brought on has like influenced me and just made me realize that again, like credit is this like credit in the dollar. Like it's like in Jurassic Park where, he goes like, well, life finds a way, and that's how I think like the dollar and the credit persists. It's like the Federal Reserve has been trying to get like a clamp on the dollar for 50 plus years, like before Nixon broke like the gold peg, like this Eurodollar system. These kind of like dollar credit instantiations have been like popping up around the world outside the control of the Federal Reserve for decades, and it's like 10 times the size, the shadow banking system of the kind of the onshore, umbrella that the Federal Reserve covers. And it's like this dirty little secret that nobody wants to talk about. And I'm sorry if I'm kind of like rambling off here a bit, but it was like when I understood even just the tiniest parts of that system, I'm like, okay, like we have to find a way to make Bitcoin essentially compatible with this system. Like if we try to just say, hey, Bitcoin is this pure asset and it's going to win and we're going to have this hyper-Bitcoinized world and nobody's going to have credit, it's like, no, this will always exist, but we're going to be pushing it into the shadows and it's going to become the same system over and over. And there's going to be these new gold 2.0 curmudgeons that are basically just Bitcoiners thinking that like, one day the world is going to fail and Bitcoin is going to succeed, but it never will because they haven't got the root of this kind of like just shadow banking system. And so with DeFi, it's like we're providing a better alternative where we're saying, look, this shadow system will exist, but like, why would you ever want to operate in this system when instead you can come and get these 0% interest loans, this kind of regulatory arbitrage, this KYC. And so the only way that you can beat this system is to outcompete it. And that's just why I'm so fired up about it, is like, I genuinely just think it's a better product.
Yeah. And that's why I like from the last podcast we did, is I've talked to a lot of Bitcoiners, and I don't want to call it magical thinking and upset anybody, but it's like we go from today to where Bitcoin is just the world reserve currency, and and it's okay if the world literally falls apart in the meantime because we get to where we want to go. And there's really no practical way that they see this happening other than just complete, destruction of the system. And I don't think they realize what they're actually saying, because it's got to have some intermediate steps, which what you're talking about is exactly what's needed. You can't just all of a sudden do away with credit lending and have capital formation and have industries operate. I mean, that's, that can't just overnight be done away with. Or even gradually, it's going to take some time. And that's what frustrates me sometimes. It's like, I get the vision, I get the utopia, but we're here, we've got to get there, and we've got to go down a road. We can't just assume that Bitcoin fixes everything, as the meme goes. It's got to start fixing something soon, and by making it available as a financial, cog in the wheel, to start actually being used in finance as collateral. That's the first step, and I read what you've been saying really does resonate with me, because it's a frustration point I've had for quite a while.
Yeah. No, I totally agree. I think I mentioned this to you guys like off the record last time once we wrapped up the podcast. But there's a part of me that constantly reflects back, and it's like, man, if I had discovered Bitcoin in I don't know, 2010 or something, would I be so deeply convicted that despite the WikiLeaks and the Silk Road, and it's kind of it would never work, would I still have the deep conviction to be I am going to hold this. I don't care what you say. I believe in this vision. I will ride this ship down to zero. And I don't know if I would have, because now we have we have hindsight, and we have so many people that have written beautiful essays on some of this stuff, and kind of gone up the philosophical side of Bitcoin. But there is this tiny subset of me that feels that with DeFi, that I'm to all of my Bitcoin maxi friends, I'm I hear you, you're right. That is the underpinnings of my belief. But there is this tiny part of DeFi that I believe so adamantly in, despite the 99% of the other grift out there, that is so essential for Bitcoin to succeed, that I don't care what they say. I don't care if it goes to zero. I believe that this is the best path forward to Bitcoin. And so I'm happy there's a small subset of people that are trying to bring this to Bitcoin, despite some major resistance from people. These are legitimate, in my opinion, missionaries, not mercenaries. So it's great.
I love that you're saying that. I just used that phrase at work today, even missionaries, not mercenaries, because I too share your conviction about DeFi, and seeing this version of DeFi with Bitcoin is the marrying of two things that are so exciting to me, Bitcoin and DeFi. I wonder myself, when you posed that question of 2010, would you have had that conviction? You're exactly right. There's been a lot of safety created with a lot of philosophical writing today that you can rely upon. It's everyone needs their sacred text to return to get encouragement, to maintain that conviction. But back in 2010, you couldn't go anywhere for that. You had some forums, but you had a very few small group of internet friends to reassure you, right? But now we're at a point where we're standing on the backs of giants. And really, if there is a time to develop more conviction, I believe it's now rather than even back then, because you have no excuses at this point. There's so much research out there. There's so much information you can get to encourage yourself about this space and about this asset class and about this new financial system. It would be irresponsible to give up right now just because SBF spooked some regulators. Banks and CeFi companies are closing their doors, and people are laying off staff, and the macro environment looks a little bit tough. I mean, Bitcoin has been through some much worse existential crises than that. DeFi has also been through a few existential crises. There's probably more to come. But if you believe in this future of what this represents, I would encourage you to think to yourself, why are you in this space to begin with? And for me, it's that idea of personal sovereignty and an open financial system. We're so close to that reality. It exists in many forms. It's just not evenly distributed yet, and it's not ubiquitous yet. And so in hindsight, maybe it'll be the most obvious thing ever. But we're still at a very exciting time where there's clearly enemies lining up against DeFi and against Bitcoin, and there are allies and leaders building this new financial system right before our open eyes, and you get to experience it. We get to experience it right now.
Yeah. I mean, conviction's a hell of a drug.
Sure is.
Very true.
Sure is. And and that really gets to what is kind of one of our main driving forces at TradFi to DeFi is this mass adoption that we're wanting to see, and that next step to get this to be, the default currency, if you would, and we're pushing as much as we can, and we're critical of people too when they're taking the easy way, or not being as committed as they should be for mass adoption. And it's going to be number one or number two on my list for probably the rest of my life. Hopefully it doesn't take quite that long, but I'm an old man, so it's all good. But get in the hands of the masses and have it usable, safe, easy, have it abstracted away so it is just as easy as, using Robinhood or these, apps on your phone that you don't even think twice about your money. But it's all Bitcoin, so, it's all good. So anyway, that's kind of my final comments. Tyler, do you have anything else you wanted to cover?
Yeah, I'm curious to hear what David thought of that and just see if, does this mission of TradFi to DeFi, resonate with the Sovryn community? I think we're on the same journey towards the same ends. We hope that there's a world in which it's ubiquitous and everyone has access. A lot like I don't think about the HTTPS protocol when I use the internet. Do you think that that's, in the future in terms of mass adoption for crypto, and Sovryn has a role to play in that?
I mean, I hope so. I'm optimistic for the future. It's definitely an uphill battle, but I'll keep hammering this home and saying, I think it's a noble pursuit. Seeing what's happening in the kind of broader ecosystem, as a Bitcoiner to my core, it's sometimes you almost want to deny kind of what's happening on the Ethereum side. You're almost brainwashed into thinking some of this stuff is bad, but then you see it and you're oh my gosh, some of the stuff that's happening with ZK rollups and data availability sampling with Celestia and proto-dank sharding and some of these contracts that are actually very, very legitimate in DeFi. It's whoa, we have to give some of this stuff credit. And I feel honestly pretty good that the advancements are happening on that side, on the technological side. And I'm gently hopeful that more Bitcoiners will kind of see this vision. And if I can play a small role in that, then I'm going to. But I think more Bitcoiners need to kind of get on this train, or at least provide credible and genuine critiques of it. But if you're simply just sitting there plugging your ears and be no, I don't want to hear it, it's well, then just get out of our way, because the rest of us are building it.
I couldn't have said it better myself, David. We hope to be amplifying your voice in this community in any small way that we can. And so thank you so much for coming onto this podcast. I speak for John and myself when I say that, we even had several conversations after our first talk saying, how much we wanted to have you back on. Where can people go to find more about your work, more about Sovryn, and just to learn more?
So you can find me David_Seroy, Seroy. In terms of finding my work, I really don't think I deserve any of the credit. I'm not one of the core team members. I'm not one of the developers. There are people kind of working behind the scenes that are doing, far more than me. And so I think they deserve all the credit. People can find the Sovryn community on their Discord channels, on the Telegram. The community managers are great. They're super helpful. They can answer any questions. And join the revolution.
And join TradFi to DeFi as well. We are going to be helping to onboard folks into Sovryn and learn more about it. We're here to really play a part in that story of TradFi to DeFi, and we hope that Sovryn is a major part of that story. And so to everyone watching and listening at home, thank you so much for taking the time to enjoy this episode with David Seroy, Bitcoin researcher and Sovryn contributor. We're very lucky to have him. John, any last words before we close it off?
No final words other than thanks for coming on, David. And, who knows, there might be a part 3.
Awesome. All right. Well, thanks, David.